G'day, I'm Andrew Lovett, and today's topic is tax-effective structures for Australian investments in US-based businesses. The information in this video will be useful for Australian entrepreneurs that may have clever business ideas or intellectual property and are looking to exploit the opportunities of that huge market in the USA and, of course, the recent tax cuts, the Trump tax cuts, which have reduced the corporate tax rate in the USA to 21%. So in thinking about tax structures, we need to take account of some key things in the taxation environment. So as I mentioned before, US corporate taxes have now been reduced at the federal level from 36% to 21%, a massive reduction. Australian corporate taxes are at, depending on the size of the business, either 27.5% or 30%. It's a little higher. There's a double tax agreement between Australia and the United States, and there's some features of it that are a little bit different to most double tax agreements. In Australia, we have a system of imputation of corporate tax, making franking credits available to investors in an Australian company, whereas if there's foreign investment, the issue there is a thing called foreign income tax offsets. We seek to make those foreign income tax offsets available to the investors. The USA has a system not only of federal tax but state taxes. So depending on the locality of the business, there may be income tax and sales tax at the state level. Under Australian tax law, there's case history and case law concerning the residency of companies, which is very important in this issue. And also in our statute, in the 97 Tax Act, there's a set of rules about foreign hybrids which needs to be taken into account with the particular solution that we have available. Okay, so what's our objective with this structure? Well, it's multifaceted. We need to take account of multiple criteria for judging what an effective structure is. One of the things, of course, is tax effectiveness, and when you have business structures that are operating across borders, there is a very real risk. In fact, it's probable that you'll end up paying double tax. And we need to guard against that and put in place tax effective structures so that you only pay tax once and you pay it at a reasonable rate. Any business structure needs to be such that it's appropriate to raise the necessary capital that's required for the business. So that might be equity finance through the members or the shareholders or owners of the business, and it might be debt finance from a bank or from some private lender. Of course, particularly when we're talking about investment in businesses in the USA, we need to consider the risks of litigation and set up structures so that they're effective for asset protection. There's a real risk with international business, and there's a real particular risk in the litigation circumstances in the USA. In addition to those, there's things like succession planning, flexibility, and simplicity, or to put it another way, cost effectiveness of the administration of the structure that are also important factors to take into account. Now, we mentioned at the beginning there's a number of factors in the US-Australia tax environment that we need to take account of. Federal and state income taxes in the USA, state sales taxes, some quirks in the Australia-USA double tax agreement, in particular in relation to the residency of companies that are quite unique and need to be taken account of. the Australian foreign hybrid rules and the Australian corporate tax residency rules. All those things need to be taken into account. We've developed a structure, a format, a plan for structures that involves the use of limited liability companies, LLCs in the USA, Australian unit trusts and Australian family trusts that provides a good solution against all of those factors. Tax effective distribution of the income taxes paid in the USA for the benefit of the individuals that own the structures here in Australia, the corporate shield that provides asset protection, and satisfactory simplicity whilst navigating two of the most complicated tax systems in the world, Australia's and the USA. That's another tax insight from LOVETTS. If you'd like more information, please get in touch.